Hello, my name is Mo. I'm a computer and data scientist. I was able to turn the cycle modest crypto portfolio into six figures. So if you're interested in hearing some of my opinions and seeing the process I go through to try and be a profitable speculator in the market, then first try watching this video, and then if you do like and subscribe, please. All right, so most people right now are actually long crypto from what we can see from Twitter and all your friends and everything, right? Um, I think that's most people that are long do not understand the risks involved in the market right now, especially with a lot of warning signals. So there are no famous indicators flashing, but there are actual warning signals in the market that not a lot of people are observing well or being able to take it in and be like, yeah, maybe it's not the right time to be long. The first thing you can actually notice from looking at a chart, just without any famous indicators or anything, just good old volume and price, you do see a lot of redness involved, especially at the volume, which is very, very usually a bad sign for the market. If you go look at good times and how the volume actually looks there, then you would see a lot more green dominating the playground of the volume candles. Not the red, the green, right? The green here. Usually there are some large red candles, but then green ones dominate in their, size. Especially you can see it right here, which meant trend continuation afterwards. And here you could have noticed and picked the right bottom of that move by just looking at the volume by itself. Now, there's a better way to actually observe the volume without looking at the volume bearer there that doesn't speak as loud as it should, because volume leads price, right? So if you want an indication of where the price and the trend is going to, then you should look at the volume first. This is what I found very, very well in helping me through my journey, this cycle. And this is how I was able to navigate the crypto cycle very well. So when I've seen these first volume candles, oh, by the way, I switched it to the volume candles. This one incorporates both price and volumes on the same chart. So we don't need the volume bars anymore. So the first thing that helped me in actually being able to sell my holdings in this zone. So I'm 100% out of Bitcoin right now, and I am definitely thinking of the best place to short BTC. An opinion that will not be taken well by many people, and probably a few just left the channel now for the video, but I'm a big believer in Bitcoin. I've studied computer science for the sole reason to read Bitcoin's code and understand how it was built, so I can be sure that if I put my money in this coin, it's not going to collapse overnight because of something wrong with the algorithm or the code or, some typos or text. I couldn't trust it. I was going all in and almost, and I needed to be sure of that code. So I'm a very believer in the cyberpunk movement. I am Bitcoin all the way, but I'm not gonna fall down with it. I will, as a trader, my sole purpose is to determine, is the price of the asset going up or down. So if my instinct is telling me it's going down, then shorting it is, and then buying it and supporting it at the bottom with the profits you made to ride to heaven with it again, right? So the first thing you can notice by just looking at the volume candles is how large the red candles are relatively to the green candles. All right, relatively is an important word here, especially here. This is even if you pull up this one, you will see the large. If you get back to normal, you can see it again, right? It was, as we spoke before, you can see here it's a little bit, the red is not a little bit, but mostly dominating. So yeah, let's read it with this one because I really think it shows the full picture. If you do not think this is a enough warning signal, then all you have to do is go visit our old cycle. So usually 5 days is the best to see it. And what you see here, when the when the green candles dominate the size of the red candles, relative domination, right? Then the price goes up. But when the red start to dominate this zone right here, start to dominate the green, that's a very sign of weakness, especially at the late time. If you can check it here, the green was relatively smaller than the red, even by margins here. That was the first warning signal in the previous cycle. We got a peak. Oh, it's here. So what we got is the first peak here and the second here. And the candles here, we had green dominating. Candles here, we had red dominating, right? So if we go look at our beautiful peaks that we have right now, we see a very similar picture. The green here was dominating, while the red here is dominating. So statistically and logically speaking, this is a major warning signal. Especially when you take into account this happened, in August and between December and August of 2021, which is the post-election cycle, which is the 4-year cycle of Bitcoin. And you compare it to the 4-year cycle right now, we're around, you can say August there, but between the zone of August and December, right? They're both happening with the same time limit and a similar structure. So that's the first one. The second one is very obvious, yet very confusing for many people. And a lot of new investors do not actually know about this fact. So if we take the logarithmic approach here, and we can get the normal candles back, what you notice is that in every cycle we ended in the post-election year at the end of that year, between November and December, always, right? That's one. That's true. And that's 3. This happened November 2013. Here's December 2017. And here's November 2021. So why does it seem very impossible for people to believe that we could be just a little bit earlier? Right? But there's also a scenario where it's very highly likely that we bounce from here get rejected, then bounce, make a small higher high again, and come back in time, like every other cycle. That's a possible option. It's still on the table. But right now, the volume candles is showing strength to the downside. Even though I took a long position here, a small one, I've closed it because the volume is just laughable comparing to the redness involved. So the short-term bounce is seeming more unlikely at that level by minimum. It might happen lower, it might happen now, but I am thinking it will happen lower because the volume here is just, the force to the downside is much greater than the force to the upside. Now there's another thing that you can look at, which is the volume footprint. Another thing a volume can teach us a lot. Now, while price can tell you the direction of an asset, the volume footprint tells you the story of that asset and what happened during that price action. That's why I like it a lot. I usually take the monthly, and the first thing I approached, I'll explain a little bit. The total is the total volume that was traded on that month or day or week, whatever time frame you use. The delta is basically the total sell volume versus the total buy volume. You know, you just minus the buy from the sell and you get the delta. But I don't like to use it like that. I like, this is all the buys, this is all the sales, so I have to manually deduct the delta at every level. So what I do is I go here and change it to delta. So at the bottom now I see the total buy and total sell, but here I see the delta of every level, which can say a lot about what happened at certain price blocks. So the first thing we should look at is the fact that this is not a fear and greed candle. Fear and greed candles are characterized with red at the bottom, you get fearful when the price drops, and green at the top, which is what you see in uptrends and up movements in bull markets or short-term uptrends. Whatever time frame you're looking is different. For example, if you can look at here, oh, this period is much closer. Like that one, fear and greed. This is an indecision candle. There's a lot of, oh no, that's full-on bear. Everything is red, just one green. This is a fear and greed. This is also a fear and greed. The red is when the price dips, and the green when the price goes up. People are buying. This is a complete greed candle right there. That's also fear. Usually see it at bottoms. If you see something like that, buying pressure, then it might turn to the upside. Now what we're seeing here is a lot of selling happening at the top still, which means there are people profit taking, especially this side. Who would sell their bitcoins at the top if you were a new buyer? You cannot. Then who would sell at the top is people who are distributing, who are profit taking. And large profit taking with 70,000 volume is a lot, for especially in late cycles. Usually to go to the upside, you have to see a lot of green deltas, not red ones, especially here. So far, we are in a positive delta. We're going to see where the month ends, but negativity have been dominating this period so far. If you look at previous accumulation zones, you can see a lot of positive delta and an increasing volume to the upside. That's what I want to see here. So if we see something similar to that, positive deltas with more buying pressure, more green, then I would definitely be in the camp of an extended cycle. But so far, this has not been the case, and therefore we have to analyze things even week by week to get a more accurate picture of what's going to happen in the next few months. If you like this content, please like and subscribe, and I'll see you in the next one. Peace.